As I've talked about before, there are a lot of options when it comes to investing. So many different instruments and things to invest your money into. In this video, I'll be talking about how you can use investing as an extra salary. How you are able to generate an extra income just by investing your money. Hello guys and welcome back to the channel. I hope you guys are enjoying the video so far. If you do, please make sure to subscribe to the channel if you like what I'm doing. In today's video, we'll be talking about dividend investing. And we'll be going through the following points. What is a dividend? Pros about a dividend? And lastly, the cons about dividend investing. I just recently hit 100 subscribers and thank you guys all a lot for that. Alright. My first point, what is a dividend? Per definition, a dividend is a sum of money paid regularly, typically annually, by a company to its shareholders out of its profits or reserves, which is correct. You can get a dividend from other types of investments as well though, but I'll be focusing on stock dividends. A dividend is, as the definition said, a sum of money that the company will pay to the shareholders. This is typically caused by a good revenue or just to state that the company is in a good financial situation. It is not to be misunderstood though that the dividend is not all of a company's profit that goes to the shareholders, since they often still spend most of their profit on expanding their business. But paying a dividend will often attract a lot of investors and therefore can be beneficial for both parts. Sometimes though, even if a company has a negative income statement, they might still pay you a dividend. This will be taken from their financial reserves and will often be done in order to keep their reputation as a company that pays a dividend every year. There are multiple track lists out there of some of the companies who have been paying a continuously raised dividend for many years. An example of this could be Dividend Aristocrats, which is a list that currently has 66 stocks in it, and they have all raised their dividend every year for the past 25 years or more. And then we also have another list called Dividend Kings. These are companies that have raised their dividends for more than 50 years now. Some of these companies might not have been profitable all 50 years, but in order to keep their name on that list, they have kept paying their shareholders a rising dividends, which is pretty crazy to have been doing for more than 50 years. Most people would most likely have gained back all of their invested money just by dividends multiple times. In order to be eligible for a stock dividend, you'll have to hold their stocks before the ex-dividend date. This is a date to keep in mind, because this is not the date where the stocks are paying the dividend, but this is the date where you'll have to hold the stock before in order to get the dividend. So, for instance, if their ex-dividend date is on the 28th of May, and then you buy the stock the 29th of May, you won't get part in their dividend. Therefore, if you want to get part of the dividend, you need to hold the stock before their ex-dividend date. Then another date is their payment date. Here they pay all their shareholders a certain amount of money. And if you go to a specific stock and browse their key numbers, you'll see forward dividend and yields. Let's take an example here with Johnson & Johnson, who is a pretty solid dividend paying company. Here you see that their forward dividend and yield is 4.04. This is the amount that they paid in dollars. And then that their dividend yield is 2.75%, which is the percentage of their current stock price. Even though this is set as a percentage, it doesn't necessarily go up as the stock price goes up, since it is a specific dollar amount and not determined by the stock price. As I mentioned, a dividend is money coming right out of the company, and therefore, when the dividend is paid, the stock will, or at least should, drop the same amount as a dividend that they're paying their shareholders, since the company's overall value now drops. This is also why new companies often won't pay a dividend, because they'll need all their money in order to grow their company, and therefore spends the money on expanding rather than pleasing their shareholders, which they might still be doing since the stock probably will rise then. Companies' dividend yield differs a lot and ranges anywhere from below 1% and up to high double-digit numbers. It depends on the company's strategy and sector. Often you will find some of the highest dividend yields in REITs, which are stocks related to real estate, and the reason for this is that REITs are obligated to pay out at least 90% of their profits to the shareholders, which of course then will give them a high dividend yield, or at least as long as they're making money, of course. Next up, I'll be talking about some of the pros of having a dividend portfolio. As I mentioned, a company's stock price will most likely drop the same amount as the dividend that they're paying. So what exactly are some of the pros of it? Well, dividend investing are often stable stocks that has stated their place in their specific sector, and therefore probably has a lower risk than some of their competitors. Next up, we'll have a look on the historic date, which you might have noticed so far I love to do, and compare the dividend aristocrats with the S&P 500 index. You can actually see that here they have outperformed the index. And this is of course when you have reinvested the dividends. So this again here shows that these companies are healthy companies, and they're even paying a dividend and still growing quite a bit. Another pro about dividend investing, which cannot be directly seen on the numbers, is the psychology behind getting paid a dividend. Sometimes it is hard to see the direct results of your investment, since you aren't actually getting any money out of it, besides of when you decide to sell your stocks. Where you with dividend stocks get paid annually, or with some stocks even quarterly. Here you can see a direct return on your investment, and this can have a positive effect on you and will have on a lot of people, which I'm one of. And this will in a lot of cases give you even more motivation to invest in the stock market, which is also a big deal and can also make you even more money. When you're getting paid a dividend, the smartest thing to do is of course to reinvest the dividend in order to get the full benefit from your investments. But if you have already built up a nice portfolio, you can also withdraw your dividend and use it as a bonus to your paycheck. Or even, if you have a really big portfolio, you can live off your dividends. Okay, so far dividends might sound really great, and I'm also a big fan of them, but they do also have some cons. One of the main reasons why people are staying away from dividend stocks is that you have to pay taxes on your dividends. So here you actually lose some of the money that you have invested compared to if you just invested them in a company that doesn't pay you a dividend. And this can limit the power of compound interest. In the US though, dividend tax is only 15%. This varies a lot from country to country, but you'll easily be able to find a list of how much you have to pay on your dividend tax. Another con about dividend investing can be that companies that pay you a dividend might not grow as much as their competitors who aren't paying dividends, simply because of the fact that they have less money to invest in their own company. But this doesn't always have to be the case though, and as I showed before with the dividend aristocrats list, some of these companies will still grow quite a bit, and this is simply caused, as I also mentioned earlier, dividend will attract a lot of investors, and a lot of investors will probably mean that the stock price go higher, and a higher stock price means more money to the company, and therefore they will actually get a lot of money. The last con is that it requires more work. Setting up a dividend portfolio simply requires more work than a portfolio without dividend stocks. This is because you'll have to reinvest the dividends in order to get the full return. If you guys are investing into wider ETFs or mutual funds, you'll often be able to find two different ETFs that follows the same index. One, which will often be stated as DIST, which is distribution, if they will pay you a dividend, or another one which will stay ACC, which is accumulated. They will reinvest the dividends for you. So if you're a passive investor, mainly focusing on ETFs or mutual funds, and you don't want to put in the extra work and decide where your money go, you should choose the accumulated ones. They'll do all the work for you, and you will get the full power of compound interest. This was everything about dividend investing. If you guys have made it this far and still have some questions, just let me know in the comment section. I hope you guys enjoyed the video. Please make sure to subscribe to my channel and like the video. See you next time.